Hey guys, Mike here. So obviously we're going to have a big week ahead. We got the FOMC meeting, which we're going to go into a little bit and talk about how the last two times the market actually performed, and they performed identically in the last two meetings. So I'll show you that. Also, we do have some earnings coming this week you want to watch out for later on. So that's a big one. And then two things you really need to watch out for, because one will dictate where this market is heading for sure. Okay, and if you just look last week, I mean, if you sold, this affects you. If you didn't, don't worry about it. But it was like $1.5 trillion in the stock market was lost last week. And again, that's only if you sold. If not, it's just paper losses, right? But obviously, a lot of people did sell. That's why the stock market drops down. So, but it's all about, and I've been saying this for a while here, the FOMC meeting, 2 o'clock, 2:30 be the press conference. This is what everybody's looking at. Are we going to do a 75 basis point hike or a full percent? And if you go back, this right here was July, which is actually, remember, we didn't have one in August. So this was the last meeting. And you can see we sold off going into it and then went on a run right there, as you can see. And then in June, you can see basically the same thing where we actually sold off going into it, had a little pop up on the day of the meeting actually, and then dropped off and then went on a massive run from there. So that was when they started painting that narrative that, oh, the Fed's gonna pivot and all this fun stuff. Appreciate all the support. Hit the like, subscribe button if you get anything out of this. And I will say, am I the only one noticing that all of a sudden, I've unsubscribed to almost every channel out there. So now I got me personally, my subscription base on YouTube down to 3 channels. And, but I notice I have videos pop up in my feed, like I'm sure you do, recommended videos. And now we've gone from a thumbnail that says recession to the thumbnail that say depression. I mean, that's the new clickbait thumbnail. I don't know if you've seen these or not. And people always wonder, like, why do they put those on there? And it's because, the big YouTubers know the more depressing it is or more eye-catching it is, you're going to click on it. So you have trained the algorithm. So it's, I hate to say it, and so you don't like to hear it, it's not the YouTuber's fault, it's your fault for clicking on it. That's why, right? And so I'll tell you right now, there will never be a depression thumbnail I make unless I truly believe we're heading into a depression. And the best definitions I can find of depression, because obviously we hadn't had one, in decades upon decades, and is that it has to be a drop of GDP of 10% or more, or a recession that lasts 2 years or more. I think from what I read, there really isn't even an official definition, because I guess honestly we only, what was it, 1929 or something last time we had one. So my grandmother was, I guess, alive back then, but that was about it. And so, but that's, the new clickbait thumbnail. And another thing I'm noticing is people are getting a lot more quiet now, right? When we started having that June rally, boy, the one thing about this kind of market is it will humble you, and it will humble you fast. And I don't understand how much longer we have to go through this for people to realize that. And, you see these talking heads on the financial channel, the YouTubers, and they would just brag about, see, I told you, I got it in the video at 158 or whatever it is, and now I'm up 30%. And then all of a sudden, those people are very quiet now because, well, now they lost all the gains, their debt down 20%. And I'm like, if it's a trade, brag all about it. Short term, but if you're telling me it's a long-term investment, I don't even know why you're talking about it. I don't know why you're talking about the gains you got in 30 to 60 days. What does that matter if it's long term? And what's funny to hear them brag about the gains, they're going up, but once NVIDIA plummeted, those same people, all you hear is crickets, right? And then so many other stocks, out there, YouTubers, financial, just bragging, and you're like, I don't understand why they're bragging. They say they're doing long-term investments. Like, why are you bragging about the gains now when we're in a bear market? It's going down, and of course it has, and they lost all the gains, now they're in the negative, but they're just really quiet about it now. And again, eventually people will get humble enough and figure out what in the world's happening. I guess, 8 months now of it isn't enough. I guess we got to have some more beaten down to actually wake them up and say, oh, I guess the Fed's serious about raising rates and the market don't like it. No, it surely does not. But if the one thing you've noticed, and I've been saying this, is not saying it's going to hold, but some of those red days last week, those stocks that I mentioned months ago that were basing out in a stage 1 and forming those support levels, they were actually green some of those days. And it was really surprising the ones that actually were green. And while the big boys, the generals, they were all down, because what's been happening? The bond market, and this is what's throwing a lot of stuff off, the bond market is having the worst year ever, right? Government bonds, I don't care what it is, bonds are just performing terribly. That was the safe haven to go to all these other years. Well, now all of a sudden, I said this months ago, what are these hedge funds doing? They're hiding out in the FANG stocks, Google and Microsoft, because they have all this cash. And I'm going to get into this a little later. And what do? They buy a lot of stock back, right? And so there's no risk of them going bankrupt or disappearing or anything else. And they won't go down as much as, these high risk type stocks and bonds. Who knows what's going to happen there at this point in time? And so it's just a hot mess. And so now all of a sudden it seems like the bonds are, in a way, if you're looking for more long term, people are starting to talk about bonds a lot more now because of how much they've been just hammered, right? And so maybe people will start moving over there, and that's one thing we got to watch out for. But, understand this week coming up here that we do have a few earnings you got to pay attention to, right? And two are my home builders. You can see right there, I believe this is Wednesday. Nobody cares about Monday, Tuesday. So you got two home builders right here. And then that third one right there, I'm circling, that's actually an industrialized, like adhesive company in like 14 different markets. They're all over the globe. And so just because they're industrialized and they go into so many different kind of components, that's something to pay attention to. Trip.com, we still traveling. And then Costco and FedEx, which is Thursday. And of course, we know FedEx already said it's a dumpster fire, economy, the world's slowing down. But Costco tends to report other stuff. They say everything's great. Everything's great. And I'm curious to see what you're seeing out there, because we drove somewhere yesterday going down this road, and most car lots I'd ever seen in my life. I mean, on one strip, it was unbelievable. It had to be 10, 12 of them, And you look out there, and it was Saturday, and I mean, man, it was busy. It was busy. I mean, these people were out there shopping for those cars, and I'm thinking, wow, not only shopping for cars, they're paying, like I said, over sticker price for them, right? They're busy. I don't know if they bought, but sure are busy. And, that's pretty interesting for an economy that's supposed to be heading down, that people are literally willing to go out there and pay, over sticker price. Sometimes it was $10,000 over sticker price for it, right? And so that's interesting to see, but Costco will be the one to listen to, because a lot of that is, you need your food and stuff, but Costco does sell a lot of stuff you don't really truly need, all right? And again, we already know FedEx is going to be a dumpster fire. They've already said it and embraced everything for it. But the other things to watch out for, the two things, is I keep showing this, and it's just the way it is. This is high yield bonds, so it's risky, right? And so these people are literally every day dealing in risk. This is what they're doing, okay? And so far, you can see on the daily, it's been heading down. It up to bump that trend line. Now it's just following it straight on down. And so the S&P is following, or either way you want to say, the HYG is following the S&P, but either way, they're hand in hand right now. But the reason why people are looking at that level I just put in there is because that goes all the way back to 2020. And so if it breaks that level, then we could head down much farther. And we already know, as I say, I mean, these people dealing risk all the time. So I'd much rather listen to them than listen to somebody who's just buying stocks. And so, again, I said weeks ago, I'm not buying anything anymore until I see, what these guys are doing and where it's going. And the other thing to look at here is the stock buybacks, guys. Look at this right here. This is the second quarter. Alphabet, 15.2 billion, Meta, 5 billion, Amazon, which always promises to buy back a lot of stock, 3 billion. They never do. But then Apple's the king of stock buybacks, 21.7 billion. So you always go, wow, how come their stock goes up and stabilizes so much? And people want to buy it because they're buying it back. And that leads me to this right here. And this is a lagging indicator, but something to start watching out for, and I'll keep you updated on it. It's share buybacks. You can tell right away. These stocks, I'm talking about all stocks, they don't go up without share buybacks. And you can see how much it's increased over the years. It's insane since the 2000s, right? But what do you see? It's still going up. Q1, again, we don't have Q2, but look back at 08. What happened? The share buyback program just fell off a cliff. Absolutely. 2018, same thing happened. And then you got 2020, same thing happened there. Or in reverse, as you can see, 2020 and then 2018. The share buybacks fell off. And so what I'm looking to see as this report keeps coming out, we get Q2, it looks like the share buybacks are still going, but you start to see the dip, because you saw, and every time we were running up in the market, share buybacks were increasing over and over and over, right? This is why a lot of institutions hide out in Apple and Google, right? Because those companies ain't going nowhere. That's just the way it is. And, there's no fear of any kind of bankruptcy or anything like that with these companies. And so, and they buy so much of their stock back, excuse me, that they're not diluting shareholders like other companies will be, right? So they don't have to go out there and start raising money like crazy, diluting the shareholders, because they have like, some of them have 90 billion. I think Google has 90 billion. Apple has, I think, more than that. And so it's just an obscene amount of money, right? They have in the coffers there, and they're bringing in so much revenue. Even in, you saw the earnings, even in these dire, times really that they call the economy, they're still bringing in a boatload of money and still piling in the cash flow, right? Even Facebook, as much as Mark Zuckerberg has ran that company in the ground, trying to change it into the metaverse, they are still a cash flowing machine. And so that's the way it is. Don't mean the stocks aren't going down. You see that last week, right? Finally starting to take a big hit. And that's why Apple's the one to watch, really, because when they start to fall, because their market cap is so large and they make up 7.5% of the S&P by themselves. And that's why it's always so dangerous, by the way, to have one stock make up that big of a major index like that, or the index. And so, but that's where we're at. That's what I'm looking for, and also why for me, I mean, obviously I'm down on Google right now when I bought, but I don't care if I'm down short term, because it goes down. I don't mind dollar cost averaging something like Google, and it can go down a lot farther. There's no doubt in my mind about that. But it's not a trade for me. It's a long-term investment. I know they're not going to dilute me. They're going to continue to buy back shares, which is great. And the company, I mean, it has major competitive advantages over pretty much everybody in their industries and stuff. And so they have big moats, right? And so that's something I look forward to. But again, if we keep heading down, they're going to go down farther too, right? I'm just not worried about them like I will with other companies who may not make it back, or who may take just years upon years to come back. Google's got, I mean, knock on wood somewhere, but Google's not going down 90%. So, and if Google goes down 90% and Apple goes down 90%, it's over anyway. Those YouTubers are right. We're in a depression, right? And so that's the only way that really truly happens, because there's such large conglomerates. But anyway, as you can tell, we got a nice rainy day in Florida here. Matter of fact, the last 2 days, I guess there's a hurricane hit Puerto Rico from what I read. So who knows? Might not be filmed for the next couple of days. We'll see, because it all depends on the weather. But anyway, I hope you guys have better weather than I do. Appreciate all the support. Hit the like, subscribe button if you get anything out of this. And hopefully I'll see you tomorrow.